Greetings from Dubai. Welcome back to another weekly market update. We're going to share with you some insights to financial market. Today I have with me Natalia. Hi Natalia.
Hi Reem.
I have a question for you. If I go to buy gold from a gold shop in UAE, it will be more expensive than I buy it from my Forex broker. Why is that?
It's a great question, Reem, because many factors. First, the demand in UAE market. Second, tariffs and taxes. And third is because the shop needs to make their profit too. It will be better if you purchase gold from your broker.
Very interesting, but is it a good time to buy it?
That I will answer for both of you. Now, as we're looking at the gold charts, I've highlighted for you guys, especially those who are watching us for the past quite a while, that ascending triangles are a printing money machine on gold. So, as we guys can see, we had markets coming back to the trend line, forming for us an ascending triangle. This was a very, very easy trade. We had an impulsive movement to the upside due to this pattern, because it is very, very common in gold. Once it happens, it's very rare to see it actually not pumping to the upside, unless if it was at the maximum peak demand. And we had actually confluence here with candlestick patterns and also the trend line. So it was a very, very good trade. I hope you guys had it done with that. So markets retraced from its all-time highs because of the market closure at Friday. So from here we can expect gold to try and keep going up in an attempt to break the all-time resistance around the price of 3,800s or 3,750s. However, the most fundamental factors are like signaling some cooling down in volatility. Now, there are some looming volatility, looming reasons for volatility, such as the tariffs that can be put on big trucks and 100% tariffs that might be brought onto drugs imported into the United States. But that's just a looming announcements. It's not implemented yet. However, we have a 3.8 quarter two GDP for the United States, which signaled a very strong confidence into the markets. And that's why we are not seeing gold just skyrocketing over and over and over again. So there's looming fear of volatility, but markets are pretty strong and solid at this very current second, because this GDP was actually the strongest we've had since mid-2023, right? So that's about gold. We can expect it to continue consolidating, forming for us a bigger ascending triangle. However, from here till this very moment, we do not have a strong fundamental reason to push gold pretty much all the way up. So this ascending triangle that's forming on gold could be the first of its time that's gonna cause gold to go down to its strong support around the level of 3,700, 510, something like that, at that support. And from there, we can see if we can get a good entry for a bullish entry or a bearish entry. So that will be about gold. Wouldn't recommend to go for a long-term trade. However, right now it is at a retracement and nearby the trend line. So if you get a good entry for a very, or not, I'm not going to say short-term, for a day trade, as in bullish entry on gold, it'll also be a good one. So just wait for the confirmation one day, keep an eye on it, and that's about gold. Let's go into Nasdaq. So looking at Nasdaq, of course, due to the fundamental outlook and we were seeing, we can see on Nasdaq that we have multiple rejections, even though lately Nasdaq wanted to go down in a very strong bearish momentum of a descending channel on a lower time frame. However, the way we are looking at this, we have multiple confirmations and a breakout on a lower time frame of that descending channel. So I had a breakout, retracement, and from there market carried on. So from here we can witness, especially because of the strong fundamental reasons, a continuation to the upside and perhaps an attempt to break above all-time highest. If tariffs go into the picture, we will see Nasdaq falling from here. Technically, it looks bullish, right, for a short period of time. There is a good possibility due to trend line movements, especially because we had two Marabuzos on that falling channel. We could see, not a good actual probability, there is a small possibility that we might see it retrace into that support. But if it does, it could be actually a very good price for a long-term position. However, it looks very strong as in bullish movement. There's something I'd like to highlight also, which is that the Feds have expected less cuts overall, and they were planning initially to cut 50 points on the interest rate on the dollar by December. Right now, these expectations are majorly reduced. And this is why we are seeing strong demand on Nasdaq, because if they don't cut it that much, gold will not skyrocket and Nasdaq is not going to collapse, which means there is a pretty strong outlook upon the economy for this year and probably also for mid-2026 till the end of 2026, because the whole interest rate cutting situation was planned since 2023, late 2023 or mid-2023 till 2026. So right now we're seeing that even though there's still some weakening signals in the labor market, but there's also some sort of stability, and we're getting positive GDPs overall, even with all this volatility that has been happening in the market for the past while. So there is some strong bullish outlook on the economy, and hence why we would want to go for a bullish entry on Nasdaq. So if it retraces, it's a better entry. If it doesn't retrace, perhaps we could have an entry here by early morning, seeing how markets perform. So that's about Nasdaq. Let's go into Nifty 50. Okay, looking at 50, exactly as we anticipated, it had moved down to the support last week. However, unexpectedly, it crashed to the trend line. So apparently the confidence in the Indian market for the past week hasn't been as optimal as usual. So from here, we can expect it technically to keep consolidating within this symmetrical triangle, and next movement we could see a slight bearish continuation to the trend line itself before a continuation to the upside. If we get a confirmation here for a bullish entry, it will also be a good buy. If not, then we prefer to wait for it to get to the trend line before a continuation in its consolidating within the symmetrical triangle for a bullish entry. That's about Nifty 50. Let's go into Bitcoin. All right, looking at Bitcoin. Bitcoin is very, very, very interesting currently. So we have a recent descending channel. From here, Bitcoin is at a very solid support. So this support actually can be this range itself, not only that price. However, it is what's a good word to this? All right, let's just keep it simple. It is touching the trend line. So from here, we can expect the minimum expectation we have is a retracement to this inner resistance and the trend line itself. However, many articles have been published, and even through this all volatility that's happening, we can see that Bitcoin, even though it's considered as a volatile asset, we can see some stability of it not breaking below and consolidating for quite some good amount of time near its all-time highs. So the plan is especially that because of the whole world is going to digital currencies, even central banks like the central bank in UAE, the Federal Reserve in US, and multiple countries also actually are working to digitally tokenize their own fiat currency. So we can notice that even though we are having some bearish momentums on Bitcoin every now and then, the biggest central banks and institutions are actually buying Bitcoin, and we perhaps can see Bitcoin on the central bank balance sheets alongside with gold as a reserve against the country's fiat currency by that time of 2030s. Right, so if we're looking at Bitcoin, it is a very, very, very good investment for long term. And right now, technically, it should have some retracements. If we find strong bullish momentum here, probably Bitcoin can show a sign to break above this descending channel and perhaps continue in an uptrend. However, this may not be on a very short period of time, maybe not this week, and that's due to the same reasons that is why gold is not most likely not going to break above its all-time highs, and that's because markets are more stable right now. But the only difference is institutions that are buying Bitcoin, they're buying it because of it can be a good reserve for the future, right? Gold is being bought for volatility at this very time being, right? So that's a major key to understand. Keep an eye on Bitcoin. That'll be it for the upcoming week. And let's go into EURUSD. Okay, looking at EURUSD. So the dollar has found strong support on DXY, and we can expect it to be a little bit bullish for some period of time, especially after all this fundamental, I'll call it drama that is happening. So technically on EURUSD, we are having EURUSD going in a bearish channel or bearish descending channel. So from here, we can expect it to trace to the upper side of this descending channel, also retracement to the inner resistance. From here, it can go down to a lower support, which basically is, like there, a better line, goes to the trend line, goes back there, and then ultimately goes to this strong demanded price on EURUSD. So technically, looks very nice, very straightforward, and probably get many good opportunities to trade it, taking a sell trade or short trade, rather say, on EURUSD for the upcoming week. That will be it for this upcoming week.
Thank you, Mr. Samer, for your insights. And now we're gonna shift to our fundamental outlook with Mr. Amidian from London.
Hello everyone, I'm Amidian here, Senior Fundamental Analyst at Xylostar and Master of Finance student in UK. Let's dive into the financial market with the aspect of fundamental, and let's see what happened in the last week. Last week, financial market was choppy as we received the latest update about the economy by different speeches and key economic indicators such as PCE, GDP, and PMI numbers by the different regions. Let's have a look. I want to kick this session with the US. In the US, last week we received the third estimate of the GDP for the second quarter of 2025. Real gross domestic product increased at an annual rate of 3.8% in the second quarter of 2025. As mentioned, it was a reflection of a decrease in imports, which are a subtraction in the calculation of GDP, and an increase in consumer spending. Both the price index for gross domestic purchases and personal consumption expenditures price index revised up from the previous period by 0.2 and 0.1 in order for the second quarter. PCE on Friday was another hint for the Fed members whether the rate cuts passed is bumpy or not, as we got same numbers market participants were expecting. Personal income increased $95.7 billion, while personal outlays increased $132.9 billion in August. Disposable personal income, in summary DPI, which means personal income less personal current taxes, increased by $86.1 billion. On the headline, PCE jumped 0.3%, but excluding food energy, which means core PCE, it only increased 0.2% in August. Jerome Powell, Federal Reserve Chairman, also had a speech at Greater Providence Chamber of Commerce 2025 Economic in Rhode Island. Powell mentioned the US economy is cooling but remains resilient, with inflation still slightly above the Fed target, but the labor market is facing a huge pressure. He noted the Fed's recent rate cuts aim to support growth, but future moves will depend on the incoming data. Let's review Purchasing Managers Index in the United States. Business growth slowed in the September, but selling price inflation also cooled. Chris Williamson, chief business economist at S&P Global Market Intelligence, marked US business grew well in the third quarter, but growth and hiring slowed in September. Rising costs are squeezing profits, though slower price increases and extra stock may help bring inflation down. Before jumping to the next region, reviewing the University of Michigan Consumer Sentiment final version can be worthy. Consumer sentiment fell about 5% in September, with most groups feeling the pinch of high prices and weaker personal finance. Year-ahead inflation expectation is slightly, while long-term expectation ticked up but remained below April's peak. In the lovely UK, private sector output expanded at slowest pace since May, as PMI number shows. Chris Williamson stated that consumer sentiment dipped in September due to high prices and financial concerns, while inflation expectations eased slightly. Last but not least, Australian inflation gauge CPI jumped to 3% year over year, up from 2.8% in July. Excluding volatile items like fuel, fruits and vegetables, and holiday travel, CPI increased 3.4%, up from 3.2% in July, which helped the Australian dollar to get stronger. From the geopolitical side, Donald Trump has ordered federal agencies to prepare for mass layoffs if a government shutdown happens, sparking concerns over economic stability. Financial markets are reacting with increased volatility as investors fear potential disruption to government services and economic data. Also, the tensions between Russia and NATO has accelerated as Russian jet fighters entered the European Union sky territory. Altogether helped the gold shiny metal to reach above $3,780 per ounce last week. For the upcoming week, the main concentration will be in the US, as we are gonna get the latest update about the labor market by ADP, NFP and job opening numbers. Don't forget, these numbers can give a clear path to Federal Reserve whether the employment is stable in the US or not. Stay tuned with Xylo Star. See you next week.
Interesting insights, Mr. Amidin. Thank you for sharing. And you, Natalia, and you also, guys, thank you for watching and stay tuned for fresh drops.